These are the key points that I've been using for 25 years. I think they're true then. I think they're true today. I think they'll be true in 25 years. And I think that's what successful investing is all about. And the first point is know what you own. I can't believe how many people own stocks and they couldn't describe to an 11-year-old in 2 minutes or less why they own this thing or what it is. If you actually pin them down and you put a whip to them, they'd say the sucker's going up. That's the only reason they have for, and this is the normal kind of company that people buy. A very simple story. I own a lot of companies like this. They make a relatively mundane product. It's a 1 megabit SRAM CMOS bipolar risk floating point data I/O array processor with optimizing compiler. Now, if you own a piece of shit like that, you will never make money. Never. Somebody come with more whetstones, less whetstones, big mega flop. I mean, what do you do if this thing goes from 12 to 9? Do you buy more? Do you walk around the block? I mean, do you call your friends? I mean, what the hell do you do with something like that? People buy this stuff. I mean, I buy stuff like Dunkin' Donuts and Stop and Shop and CVS and made money in all those. And Sally Mae was just here right before me. I mean, it was a stock I bought. They had a great name. It was Student Loan Marketing. I mean, who would ever buy anything like that? It was a great name. If you heard the story, I think if 100 people heard the story, I think if 100 people looked at Sally Mae, they would have bought it. But 100 people wouldn't look at it because imagine loaning money to students. Imagine doing anything with students. I remember everybody telling me about that in 1981. But in 83, I remember they said, well, the economy's bounced back. We're in a recession in 85. In 85, they said we have a recession in 86. In 87, something happened in October 87. I forget what something happened in October 87. Celtics lost 7 in a row. Something bad in 87. They said for sure we have a recession in 88. And they said 89 for sure we'll have a recession. And then 90, we're supposed to have the so-called soft landing, which we never had. So I've always said if you spend 13 minutes a year on economics, you've wasted 10 minutes. All you need to know about the stock market is it goes up and it goes down, and it goes down a lot. And that's all you need to know. Again, it'd be terrific to know what's going to happen in the economy, but I deal with facts. If inventories are going up, if copper prices are going down, if room occupancy is going the wrong way, people building too many hotels, I look at freight car loadings when I own railroad stocks. I deal with facts. I don't deal with people tell me something's going to happen in the future. You might as well call a psychic hotline for that stuff. I think you have a better average. You got plenty of time. This is true with Sally Mae, it's true with Dunkin' Donuts, it's true with Stop and Shop. People are so insistent, I'm that way too. I have to fight it. They have to buy a stock, let's say it's now 501, I haven't found a stock yet today, I gotta find a stock before sunset. You could buy Walmart 10 years after Walmart went public. Let's say you're a very careful investor. You waited. You said, I don't know if this company can make it. You waited for Walmart to roll it out. You could buy Walmart 10 years after they went public and made 30 times your money. 30 times your money. 10 years after they went public, they're only in 15% of the United States. 1.5. They hadn't saturated the 1.5. You could say, well, why can't they go to 17? Why can't they go to 19? I mean, why don't I take a leap of faith here? Why can't they go to 26? Here's a good one. If it's gone down this much already, it can't go any lower. I remember when Polaroid went from 140 to about 107. People said, if you ever get Polaroid under 100, you got to buy it. You just back up the truck, buy the stock. The stock you get to 110, then rally, fall 103, you go 112, go 105. They said, gets under 100, buy Polaroid. Polaroid broke 100, people started buying it, and within 9 months, the stock was 18. So just saying it's gone down this far, how much lower? I mean, it's crazy, but it can keep going. In fact, I tried this out. Kaiser Industries, I was a new analyst at Fidelity, and we were about to buy the biggest block ever at Kaiser Industries. The stock had gone from 29 to 17. We're about to buy the largest block ever in the history of the American Stock Exchange. We bought, 10 or 15 million shares. At 15.75, I said, my God, the stock's gone from 29 to 17. How much lower can it go? So we bought this enormous block at 15.75. So I called my mother and I said, Mom, I guess stock at Kaiser Industries, it's 10. So about 3 months later, I said, you got to buy this. It's gone from 29 to 10. How much lower can it go? Well, it went to 9, it went to 8, it went to 7, it went to 6, it went to 5, it went to 4. Now, fortunately for me, this happened very rapidly, or I'd be working at the Stop and Shop back and behind the lines at Fidelity. So fortunately, this was compressed in only about 6 months. So I had to go to the fund manager and say, I was a little bit early on this at 15.75. We call this premature in the business. We had a correction, which is a euphemism for losing a lot of money rapidly. So I said, let's check this again. The stock's 4. They own 45% of Kaiser Aluminum. They own 59% of Kaiser Steel. They own 38% of Kaiser Cement. They own all of Kaiser Electronics, all of Kaiser Broadcasting, which had 7 TV sets. They own Jeep. They had Kaiser Fiberglass. I said about Kaiser Sand and Gravel. They had a bunch of other Kaisers. And they had no debt. Now, in this room, because I know no one's ever gone bankrupt without any debt. Now, that would take I think you have to give some kind of distinguished service award to somebody who did that. But they had no debt. I said, it's not going to go to zero. I was wrong when I said it can't go below 15. So we hung on, and within 3 years, they gave out the shares in Kaiser Steel, gave out the shares in Kaiser Cement, gave out the shares in Kaiser Steel and Aluminum, and they sold off all the businesses. You got $55 a share. But if you didn't know the story, and the stock went from 15 to 11, and you're just saying, how much lower can it go? When it went to 9, went to 8, you would have gone. So you can't just say it can't go any lower, because I saw Taco Bell go from 14 to 1 in 1974, and they had no debt and making 60 cents a share. There's a corollary to that that's even more dangerous. If it's gone this high already, how can it possibly go higher? Philip Morris, adjusted for splits, sold for 12 cents in 1951. Then it goes to 60 cents in 1961. So it goes up fivefold, and you say to yourself, how much, this never sold for that, but just for splits, you say, how much higher can this go? It's gone up fivefold. They missed the power of Marlboro. They missed there's 220 countries in the world. They missed the cash flow of the company. They missed everything. This stock was a 100 bagger after going up fivefold. But people sold it just saying, how much higher can it go? Can't go any higher. They did the same at Home Depot. They did the same with Toys R Us. I did the same thing at Toys R Us. Just saying it can't go any higher, it's gone this much already, that's very dangerous, and don't use that one. It's a very bad thing to do. Eventually, they always come back. Here's another one that sucks. That's a technical stock market term we just use only in the stock market. RCA just about got back to its 1929 price, was backed out by GE. Manville never came back. International Harvester, even with its name changed and adjusted for splits, hasn't got all the way back yet. Western Union, double knits, remember those wonderful things? Floppy disks. They don't have to come back, but they say eventually they always come back. Not true. Here's a great one. It's $3. How much can I lose? This is a great one. I don't have a computer and I can't do high-level math, but just do this one. So let's say your neighbor buys $10,000 of a stock at 50, and the stock's now 3, and you put $25,000 in at 3. If it goes to 0, who loses the most? A lot of people cannot answer this question, I mean, if you put $1 billion in at 3, you can lose $1 billion. I mean, they blow taps in lots of companies every year. They can go to 0. Here's a good one that helped me a lot. It's always darkest before the dawn. This business is terrible. It's awful. You ought to buy the group. This is not a good way of making money. Here's one you're probably talking about before lunch. Freight car deliveries. In 1979, there was 96,000 freight cars delivered in the United States. 2 years later, it fell to 45,000, the lowest in 23 years. It goes from 96,000 to 45,000. People say business is awful, it's horrible, pathetic. Then it falls to 25,000. They say, just load up. There's about 15 opportunities to lose money. There's about 15 suppliers of freight cars, 15 manufacturers. Business was awful. But last year, we shipped 7,000 freight cars in the United States. The business just continued to be miserable. And there's even greater opportunity to lose money on energy services industry. This, we all had a great opportunity to get our heads handed to us. In 1982, there was 11,000 of those oil rigs drilling those holes all over Oklahoma and Texas and Colorado. We used to have the rig count every week. And the rig count fell from 11,000 in 82 to 6,000 in 83. Then fell a little bit lower in 84. And there's hundreds and hundreds of companies here. Companies that made the muds and did the downhole stuff, the fracturing companies, the well companies, all the measuring companies, the Schlumberger, the bid companies. Lots of opportunities to lose money here. There's equal opportunity here for serious losses. And the people said, listen, the business is terrible. Let's buy these groups. Well, the rig count was only 1,000 3 years ago. So it went from 11,000 to 6,000 to 5,000. Then 8 years later, it was under 1,000. The industry really started to turn about 2 years ago. So just saying the business can't get worse. I was lucky enough, in addition to having the metals industry when I started Fidelity, I had the textile industry, which is a great group to follow. Because you follow companies like J.P. Stevens, was founded in the 18th century, and West Point Pepperell was founded in the 18th century. These people have been through recessions, depressions, world wars. They've seen it all. There's a great expression in the textile industry. It's always darkest before pitch black. Now that's a good one to remember, because when business is terrible, it can get considerably terrible. You get terrible to the power of 6. And if you watch Jeopardy and people come out, they will know those numbers. Remember, they'll know the numbers. And they'll know what country, 2.5 years ago, I had no idea about this, very surprising to me. But I'll guarantee you the market will be a lot higher in 15 years. It'll be a lot higher in 25 years. What it's going to do in the next 1 or 2 years, I don't have any idea. And if somebody in this room knows about it, they're not telling anybody. Or if they know anything about interest rates. Because in interest rates, if you can be right 5 times in a row in 10 grand, you can have 2 billion. There's not that many people with 2 billion. There's a lot of people predicting interest rates. Did you ever think about that one? Just 5 times right in a row in 10 grand, 2 billion. So I don't worry about that. I know we've had a century and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25%. So 15 and 96 years, about once every 6 years, the market falls 25% or more. That's what we call a bear market, and it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with. When do you sell stocks? When you sell a stock is exactly the reason you buy it. You write down the reason you bought it. That's what you're looking for. The reason you buy a stock, you keep it posted. If the reason changes, you go on to something else. Do you believe the S&P 500 market is expensive? Yes. I don't believe in diversification at all. I would own one stock if I could find one great stock. Diversification is a big mistake. I call it diversification. You buy this thing that might balance this other thing and they both go down. I don't believe in diversification at all. I would own one stock. But what I do believe in is if I find 10 good stories, they're all equally attractive, I buy all 10. And I wait to see them unfold. It's like watching 10 poker games. 10 games of stud poker. You watch the cards turn over, story 3 gets better, story 6 slips, story 7 stays the same but it goes up 50%, so you sell 7 and buy 2. That's all I do. So if they're equally attractive, I buy all 10. Then gradually some story says, oh my God, this is getting better and better, and guess what? The stock just went down. So you keep watching 10 stories and magically, because of that rule of stocks going up and down a lot, then you load up. You really, take a big advantage. So that either happens because something happens to the company or the market goes down and all stocks go down. They're in the 5th inning of the current bull market. This is also bullshit. The only difference, this is more current bullshit.